So every fall, new students get excited for their first year of university, thinking about all the new classes they're going to take, new friends, new living environment, parties, and just games and all the fun and memorable events to come. Both these new, thrilling thoughts and minds, so let's skip over the cost behind this life tradition. The student debt crisis has become a major issue, especially within the last decade. And according to educationdata.org, the student debt is at $1.71 trillion. So college tuition has skyrocketed and the student loan system has become very complex. The student debt crisis not only affects low-income and middle-class families, but it's also playing a key role in affecting the economy and just in general the lives of Americans. In this speech, we'll learn a lot about the student debt crisis, starting with the history of student loans, the increase in tuition, the effects it has on people mentally and physically, and how it affects the economy. So starting with the history, one of the first times that college was made accessible to people was in 1944, just after World War II. The government passed the GI Bill, which is just basically when veterans return from war, they just want them to be able to go back and live a normal life, get back into education, go on with their job, just get to a normal life pretty much. The next bill was the National Defense Act in 1957. It was a response to the launch of Sputnik by the Soviet Union. Pretty much America wanted Americans to pursue more math and science degrees, so we'd have smarter people to kind of one-up the Soviet Union. They wanted to have smarter people so we can improve our space area. And then the earliest form of student loans is the Higher Education Act of 1965, which is kind of similar to what we have today, which is lending federal money to banks and private lenders with a low interest rate. So obviously having student loans is very important, as it gives so many Americans opportunity to go to college and get higher education. You don't have to have good credit, you don't have to have a cosigner. You can put a pause on payments. Screen's dark. So no doubt it's made it realistic for a lot of people. But over the years, the cost of tuition has gone up a lot. So Camilo Maldonado is a finance reporter for Forbes magazine. Puts hypothetical that he went to school in 1989 and he got $26,000, which adjusted to inflation is $52,000. Go to school now would be $104,000, which is literally double that. And tuition has been rising 3% every year, and within the last decade, it's risen about 26%. So it's easy to think it's not a big deal if you think like, well, wages have gone up too. But actually, the average cost of college in America is increasing 8 times faster than the wages are in America. They don't really line up. And it just means that each new generation with the bachelor's degree is going to be more in debt than the previous generation. So, some of the effects on people's personal lives. One major way is people not being able to afford a home. Terry Williams, who's a business writer for The Economist, says in 2015, Equifax asked millennial renters why they're not buying homes, and over 55% of them listed their reason as student loan debt or not enough money saved as their reason. Even though you can have monthly payments, student loans still hinder you from having that minimum down payment amount that you need. Because of this issue, many young adults have no choice but to live at home. And Zillow did an analysis in 2015 where 14 million Americans aged 23 to 37 were still living at home with either one or both of their parents because they couldn't afford to live on their own. So juggling between student debt and rent is very difficult and a little unrealistic for a lot of people. It's also Chris Ingram, who's a reporter for the Washington Post, says the student loan is delaying marriage and family formations. And in 2015, there was a study that found a link between women's student loan repayment schedule and their timing of their marital stage. So they're actually paying off their debt around getting married and starting families. And it says that an increase in $1,000 student loan debt lowered the odds of marriage by 2% a month among female bachelor recipients in the first 4 years after graduating. That fact didn't really make sense. Ingram also includes that these findings have been supported by more recent research that have a similar trend. Student debt can crush somebody pursuing their dream job. Terry Williams says somebody might desire to work at a nonprofit organization, but instead will push aside these aspirations for a job that pays more so they can pay off their debt. So sacrificing a job that would give you fulfillment and purpose, you're really just getting the job to pay more to pay off your debt. It's not, you might not like it, but She mentions if you can't make a payment on time, your credit score decreases and it's hard to purchase a home and other costly investments. Not making payments on time can mean higher interest rates and insurance grows. So people are just getting jobs that pay more, pretty much, to pay off the debt. So going into the mental health it has on people, or the mental health effects. In 2015, a landmark study was done by Kristen Wooten. She's an associate professor at the University of South Carolina and the director of Carolina Consortium on Health Inequalities and Populations. So in 2015, she did a landmark study where UCLA peers looked at 13 years of data from a nationally representative sample of 9,000 young Americans using info on those that had student debt, and found that student loan debt tied with low levels of psychological well-being from people aged 25 to 31. And this was actually this was even after considering their income, their occupation, their family wealth, and their level of obtaining education. It continues that putting off marriage, homeownership, and neglecting 401ks is due to these high payments. Going on to some physical health effects, an article by Abby Abrams, who's writer for Time magazine, discusses a study by Northwestern University where 8,400 young adults aged 24 to 32 were analyzed based on conditions of debt and health. And there was a study that was able to link student debt to high blood pressure, as well as poor self-reported mental and overall general health. And having high blood pressure led to cardiovascular metabolic conditions, and psychological problems with debt led to broader health problems such as poor dietary choices, little physical activity, and substance abuse. So we'll learn a little bit about how it affects the economy. Simply, if somebody's paying off student loan debt, they probably don't have the right amount of cash to start a business. Chris Ingram puts into perspective an increase in standard deviation and student debt translated to a decrease of 70 new businesses per county, which is about a 14.4% decrease. Along with small businesses, the housing market's declining, as I said earlier. The Federal Reserve issued a report showing that student loan debt prevented 400,000 young families from purchasing homes. So it's about a fourth drop in home ownership and for rates around this demographic from like 2005 to 2014. And StudentLoanHero.com also mentions that with student debt, it doesn't really prep anybody for a recession or just unexpected like high costs. You kind of have money saved for a rainy day, but if a lot of people have a lot of money in debt, they're not putting a bunch of money into their savings. So something happens, they're paying off their debt, they don't have money in savings really. So just overall affects everybody. So in the end, you learn a little about the student debt crisis and how it affects people. Through the history of it, the rise of tuition, the effects on people's lives, mental and physical effects, and the economy. Having student loans helps in the meantime, but it can have lifelong effects if it's not understood more. Getting higher education is important for everybody, and hopefully it can be done in a way that won't hurt everybody's finances long term. From today's stats, it's clear that tuition is rising, it's a fact. Maybe one day we can come up with ways to make it more accessible to